Hey, rich friends, it's your girl Chacha reporting live from the Money Mantra, and we are back with another Forex education video. The reason why I like to post is to help as many people as possible become independent and profitable traders. So if that's something that you're interested in, make sure that you do subscribe to this channel. If you do get to the end of this video and you find that it's helpful, give me a thumbs up, leave me a comment to let me know what you learned, but more importantly, share this video with another trader. So in today's quick video, I'm going to be showing you guys a trade idea that I dropped in the group chat for my rich friends on September 3rd, 2023, that we can see from the timestamp here. Now, the trade was for Euro JPY. It was recommended for a sell or to sell at market execution or to set a sell limit at 157.750 with a 40 pip stop loss and a 40 pip TP for a 1-to-1 risk to reward ratio, a TP2 of 60 pips and a TP3 of 80 pips. So this is how the trade actually turned out. This trade hit stop loss just a few pips above where the suggested 40 pip stop loss was from the sell limit trade idea. So I'm going to be going over what happened in this trade and what you should look for when you are taking trades using this strategy. So firstly, I am going to be backing up the market to when I actually got in this trade, which is here. This was our entry candle. So on my strategy, I use 4 different indicators, and I'm looking for certain confirmations that help me determine if I'm going to get in for a buy or a sell. So for my EMAs, which are at the top of the chart, when the candles are below my EMAs, the EMAs tend to act as an area of resistance, and the market will usually sell when they are under, versus when the candles are above the EMAs, like here, the market will tend to use the EMAs as a trampoline and be on an uptrend. So the first thing I noticed on my entry candle was that the candles were below both of the EMAs. So for me, that was a bearish confirmation. Now, the next thing I look for on my momentum indicator, I look for the momentum indicator to be facing down, and I also look for it to be below 0. So I'm actually going to back up the market to when I dig into the market so we can still see that the candles are below the EMAs. We can see that my momentum line is not facing down. However, it is negative, letting me know that it's below 0. So here I have my third bearish confirmation. For me, 3 confirmations are good, 4 confirmations are great, and 5 confirmations are fantastic. So far, I felt confident enough to take this trade for a sell. So the last indicator that I have is my stochastic, and I'm looking for 3 things on my stochastic. And ironically, I didn't have any of those things when I took this trade. So that could be the reason why it did not go in my favor. So the first thing on the stochastic that I'm looking for is for the line to be facing down, because I use certain trigger words when I'm trading. If the stochastic is facing up, the market may be going up. If the stochastic is facing down, the market may be going down. So in this case, I can see that it was facing up, making it a bullish confirmation, which did not go in my favor. Now, the second thing is that the orange line should be above the blue line, but here we can clearly see, even if we zoom in, that the blue line is above the orange line, making this another bullish confirmation. And the last thing that I look for on my stochastic are for one, but preferably both of these numbers to be below 50. And here I can see that my orange line was 48 and my blue line was 56, only making it a halfway bearish confirmation. So although I did have 3 confirmations for the sell, the trade actually did not sell. It did continue to buy. So it went up and my sell limit was triggered. However, the market continued to push up and it is now rejecting off of the second EMA. So remember what I said at the beginning, you can use the EMAs as support and resistance. So while I was focusing on the 50 EMA being my resistance, in this case, the market actually pushed up to the 200 EMA, completely breaking out of our area. So I'm not sure what this trade will do. I probably will reassess for the rest of the week. It is NFP week, so I should have practiced additional caution when it came to analyzing this trade, but I did jump the gun being that I did have 3 solid confirmations. So I really hope that this video was helpful and that you learned something. It's okay to lose in the foreign exchange market as long as you have a really good win rate. So until next time, rich friends, if this video was helpful, make sure you give it a thumbs up. Leave me a comment. Let me know what you learned. If you do need more assistance beyond these videos, you can register for personal mentorship or follow me on TradingView, and that information is down below in my description box.